Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG. Thought we would come to you today with a brief market update, kind of let you know what's going on out there. S&P 500 is right around 4,000 as a level, that sort of magical round number that it seems to like to hang out at least recently. That is up about 4% for the year. So as we sit here in kind of late-ish January, that's quite a strong start, a positive month. And it's really been driven by a couple of different factors that we're going to go through. The first is it is becoming more and more apparent that the Fed is going to be comfortable with a series of 25 basis point or 1/4% rate hikes going forward. The rhetoric that we've seen out of a number of the members of the Fed over the past few weeks, last week in particular, would suggest that the Fed acknowledges that we are starting to see some cooling off of inflation, that the economy has taken notice of the rate hikes that they've done to date. And that with that moderation in inflation, maybe now is the time to sort of slow down the pace of rate hikes, which the market views as welcome news. Their next meeting is February 1st, so we'll obviously have better detail on it then. But I think the conversation of the Fed is rapidly shifting from how high do we have to move rates in order to get the economy to pay attention to the fact that we're trying to slow things down. We seem to have gotten that answer around this sort of 5% land where the Fed seems to be settling in on. And that question is now shifting towards how long will we have to leave rates there? How much data does the Fed need to see before they're convinced that inflation is actually starting to move in the right direction? So that's generally a positive news for equity. I would also just say that generally over the past few weeks, we've gotten better data globally around economic activity. So whether it's China reopening, lifting a whole lot of COVID restrictions, whether it's Europe, Western Europe in particular, that looks like it may be able to avoid a recession, or probably will be able to avoid a recession. That has just been sort of a positive macroeconomic tailwind for the sort of global growth picture, which I think equities are paying attention to. And then last but not least, it is earnings season. So far, we are very early. We've seen about 10% of the S&P 500 report, 56 companies to be exact. And so far, those earnings trends have come, what I will say, in line with expectations. So earnings down about 4.5%. Versus a consensus expectation of down 3%, revenue growth of about 7.5% versus consensus expectations about 4% growth. And I would just note that, so far to date for the quarter, we've seen about 60% of the companies that have reported beat expectations. That's normal. Normally it's anywhere from, 50 to 70. In the past couple of earnings seasons, which have been very strong, we've seen more like 80% beat. This quarter, we've seen, it looks like it's more of an inline quarter, which, no bad news is good news in that regard. Last but not least, over the past week or so, we've seen a number of headlines coming out about layoffs in the tech space. I would just note that is a very sector-specific issue and is not really that reflective of the overall strength of the job market. If you look at the number of employees that, the likes of Microsoft and Google and Amazon added post-pandemic, they're really just trimming, the barest of what they added. And they're trimming some from what I'll call their more far-reaching, out in the future projects, whether that's, investments in the metaverse, if you're Facebook, or, some of their more long-term growth projects that maybe don't warrant as much investment given the higher interest rate environment. They still have far more employees now than they did back when COVID started. And if anything, if you look at the health of the employment reports elsewhere in the economy, you'll just sort of note that that does tend to be a very sector-specific issue. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I look forward to talking to you again soon, and I hope you have a great week.